Hello everyone, the Chart Guys have been working on an introductory technical analysis course for quite some time now, and after surveying hundreds of traders with what would be the most sought after information regarding technical analysis, we came up with this course, When to Enter and Exit. It covers over 5 hours of the basics on when to enter and exit, and we feel after watching this course it will help build a foundation of technical analysis knowledge which will eliminate a lot of the uncertainty in the world of trading stocks. So the course outline, we go over the psychology of trading, establishing a game plan, the different indicators we use to signal a bullish and bearish entry, how to recognize support and resistance levels, poor entries, where traders make mistakes, exit targets, how do you know where to sell your trade, where to place stop losses, that's very important, minimizing losses is what keeps you in the game long term, my personal preparations, how I go about getting ready for each trading day, and then piecing it all together, utilizing all the information we just learned and how to apply that in the real world for making successful, profitable trades. As a bonus, we also include a lot of information on finding entries and exits utilizing patterns, and you can find these patterns on every time frame on pretty much any stock and commodity trading, and certainly being able to recognize those patterns can give you an edge as well. So we hope you will check this out. Again, it's an introductory level course. So if you are new to technical analysis and trying to get a firm grasp on things and feeling a little bit overwhelmed, then this course is for you. I hope you check it out. Appreciate you watching. Hey everybody, checking back in on gold, and we'll start with the dollar on the hourly. So this uptrend line on this bounce attempt by the dollar breaking and an all-out dump following, breaking to lower lows. So the bears absolutely still in control of the dollar as we hit to lower lows. And from here, it's all about $100 psychological support. You can see a couple days here where we dipped below $100 but maintained closing above it, a close below $100, and we could be at risk of breaking this uptrend on the daily time frame of very clear higher lows. 99.43 would be the exact support I look to. That's the low of that consolidation. But if we close below $100, we know we have a lot of weakness. So it's a very clear follow through to the downside. We never confirm that bullish reversal candlestick, that hammer from the end of last week. And checking in on gold, obviously I was wrong. I was calling for a temporary top in gold. That was not the case. We did not get a significant pullback. And I'm always fine admitting when I'm wrong. If you want to be a trader and you are not okay being wrong, it's not going to go well for you at all, because you are going to be wrong and you're going to be wrong often. It's just, number one, limiting the losses on when you're wrong with either stop losses or knowing when to get out. And number two, being right more than you're wrong. It's as simple as that. You can be wrong, 4 times out of 10 and still be a fine trader. But either way, if I recall correctly, I was looking for, I believe I said I would exit a bullish position due to the signals that were coming, and not convincing enough. It was an early call, so not convincing enough to go bearish, but certainly was enough for me to want to take profit. And I still stand by that. Of course, when you're wrong, you always want to go back and review your trades and look for all the little details and what you could have gotten from it. So I did that, and I reviewed the inverse bearish reversal hammer, inverted hammer with a long upper wick, rejecting from 1200 psychological resistance, coming after an extremely strong bullish move to the upside without seeing any real significant consolidation on that move to the upside, and it was coming on decreasing bull volume. So I'm still fine, to be honest. If I look back and did it again, I would probably make the same exact play, because 10 times, if you look at that bearish reversal inverted hammer and play it out 10 times, more often than not, you are going to see consolidation off of that profit-taking upper wick. So obviously we did not see that this time. We did not confirm the bearish reversal candlestick the next day, so that's when we knew, okay, the bulls are still proving themselves, and now we see big-time follow-through, breaking that decreasing volume pattern. So the bulls are still in control, absolutely. And from here, I would only be looking to day trade gold bullish. I would not be comfortable holding these bulls and these miners overnight, just because, again, we've seen 14 of 16 days in a row green, and we have not consolidated much at all. The RSI has gone from 20 up over 70 without any consolidation, and we are approaching overbought conditions on the daily time frame. So now we're looking at resistance. I'm looking at these little bounce attempts from the original dump, and we had a couple bounce attempts that ended up being bear flags with continuation to the downside. But I'm looking at resistance of 1220.90 and then 1232.92. So in order to make a bearish entry and to be looking bearish, we're going to have to see a break of these higher lows on the hourly. So we did have that pullback, but we did not break the higher low pattern, I should say, because we had our low down here at 1177.08. Right here is where we were looking toppy and we pulled back and we didn't get a break of that level, so still maintaining a pretty strong uptrend on the hourly time frame. So from here, we're consolidating, just looking back at the past dozen hours, higher lows, lower highs, reaching an equilibrium, tightening range. We're going to see this pattern break overnight before we head into tomorrow morning, and we're either going to be looking up at the 1220s or we're going to be looking down at support, previous resistance, in the 1206, 1207 range. So checking in on silver just to keep an eye on what everything is doing. Silver is still lagging behind gold. Silver is right now testing its high from December 7th, and you look at the high on gold from December 7th, and that's all the way back in the 1180s. So we're currently $40 above where silver is back testing that resistance. So keeping an eye on it though, because if silver does break this 1722 level, we should see some nice continuation to the upside, and that can only help the bull miners, especially the junior miners, which are more exposed to silver. So all in all, bulls still strong, but like I said, only looking for day trading opportunities because not trusting the lack of consolidation and the overbought RSI on the daily time frame at this point. But if we see the dollar break $100, gold is going to be doing really well. And there's another thing to point out, the correlation between the dollar and gold. Right now, the dollar is higher than where we were on December 8th. So if that correlation were direct, if it were tick to tick, tick for tick between gold and the dollar, right now, gold would still be under the high of December 8th, which was that 1180 level. So clearly gold is stronger than the dollar is weak, if that makes sense, but it's not a direct correlation between the two. Another thing to keep an eye on is SPY weakness. Check out my SPY video. We're testing a key daily middle Bollinger Band support for the third time in 4 days. It is still holding, but the correlation is still there. When we see SPY weakness, we see gold strength, at least in the past week. And today we saw oil, the market, SPY, and the dollar all dumping in unison, and that is when gold on the 15-minute time frame started to see this bullish action right here. This is the 15-minute, so we had a tightening range, and then the bulls showed up for an hour as oil, the dollar, and the market all pulled back. So definitely watching that correlation as well, because if SPY starts to see weakness and loses that middle Bollinger Band, that's only going to be fuel for the bulls to continue higher. So looking at the weekly time frame, actually let's switch on over to these miners now. GDX. So the gap up and the bulls held the gap and we hit higher highs. But note that the miners are still lagging a little bit. We're currently just above the price that we hit on January 5th. And again, you look back at the daily on gold. Where were we on January 5th? And we were back down at 1185. So we are currently $35 higher than we were back then. But the bulls are just very slightly higher. So there's not a direct correlation between these miners and gold either, as we're just breaking to higher highs, even though gold is currently $35 higher than this level. So resistance from here, 2356. We'll keep an eye on this 100-day moving average. The gap will fill if we drop down to 2284. And after 2356 resistance, the next level, and that resistance is coming from previous support. Look at this little consolidation low of support. That's 2357. And now we're rejecting from 2356. But after 2356, looking up at 24 and 2427. We have the middle Bollinger Band as support on the weekly for the first time. If we can close above 2287 here on GDX, that's the goal for the bulls this week, to see this bullish MACD cross follow through. But again, we haven't seen any consolidation since the lows, and we need to have that in order for the bulls to be confident that we are reversing this trend, because again, as of right now, it's an oversold bounce. It's a very, very strong oversold bounce, but we need to build support levels on the way up and consolidate and continue to form higher lows, or I should say begin to form higher lows. GDXJ is right at the 200-day moving average resistance of 37.97. We did reject from that level. Same story, haven't filled the gap. Bulls held up nicely. The gap will fill at 36.76. We're only slightly higher than we were January 5th. Next resistance after 38.08, looking up at 38.90 and 39 psychological. So bulls buying the dip, closing up near the high of the day. We did turn that middle Bollinger Band into support last week, so seeing continued follow through for the bulls this week, on the verge of a bullish MACD cross here as well, and waiting patiently for some consolidation to be confident in the longer term trend. And at this point, consolidation on the weekly, bulls are going to want to hold the middle Bollinger Band support on a back test. So keeping a close eye on the weekly middle Bollinger Band, close eye on gold, dollar, the market. As you can tell, if you are a gold trader, there's all kinds of things you need to be keeping an eye on, and that's why you see these setups with all these monitors, because you need to be watching all these different things in unison with each other to be getting the complete picture as to what is going on. So bulls still in control. Congrats to the bulls that held. Perfectly fine to have differing opinions from me, as I'm not always right and never will be. And now we're going to watch to see how much further momentum the bulls have to the upside. So appreciate you watching. We'll check back in tomorrow as always. Have a great night.